Good morning. My name is Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Sales International Limited. This is London Morning Commentary on Thursday the 19th of July, and we're going to cover a number of different charts today. We're going to start off with a currency, the Japanese yen. Now if we look at this one, you'll see fairly recently we've been talking about this, I've been talking about this, saying that this has formed a diamond pattern. I had worries about it being a diamond pattern top, but it turned out to actually be a diamond pattern continuation. And we're so close to actually making that high. The only thing that stopped us yesterday was we formed a doji cross where we opened and closed roughly at the same level, though we did actually make a new high, a recent high as well. The X1 target there, as you can see on the chart, 1365 area, that's the target for the diamond pattern. It's not perfect, but in the last week we had 2 key reversals up in 3 days. The only thing that would actually counter this would be if we dropped down and went below the recent 50% Fibonacci level at 108.83. That seems unlikely at the moment. So we're looking for that 113.65 area to fulfill the diamond pattern formation. And that's basically, it's moving nicely within what has been a pretty good pattern. Now we're going to move on to a minor currency, the Mexican peso. Now the Mexican peso, I spoke again about this recently, has been very interesting because it's been coming down. It's been coming under a lot of pressure from various key reversals and other activity in there. As you can see, there was a weekly key reversal down which failed back in May, but the key reversal last week pushed it even lower, and we've come down to some minor Fibonacci support around about the 1875 area. But that shouldn't really hold the market up. We've got a lot of pressure on the top side. We've got resistance at 1907, which is the long moving average, 1919, the medium moving average, 1845, which is the 50%, the recent 50% Fibonacci level, and 1945, and then 1986, which is the very recent Fib. All this is pressuring down. So why should it turn around? Well, there's one thing that's holding it up, and that's the lower time of the July 2017 to April 2018 Andrews pitchfork. As you can see, it's in the middle of basically nowhere, but it's acting as support. And the way you can see it's acting as support is that we've had some reversals, and notably yesterday when we had a doji cross. And it's a touch of uncertainty, indecision, and that's when it went up and down and closed and opened at the same level. Not dissimilar to the one we saw earlier in Japanese yen, but this one, again, it's a little bit more on the downside. We've got down possibly to 1858 today. It's a gradually moving, ascending dynamic support. But then we've got to see what happens on that. And that's actually quite an interesting chart to look at on the minus side. So we could see some support out of nowhere in the not too distant future. Now we're going to move over to a commodity, and I'd like to look at the ICE New York cocoa contract. This is the second month continuation, and the reason I'm looking at this is we had a very big, huge key reversal down earlier this week on the Monday, and that's brilliant, great. We can now see the market moving down, but it didn't, sort of hesitated a little while, and then it sort of started to run into today, or yesterday really, the support band, which is between 2377 down to 2320, with the long moving average underneath that at just at 2299, let's call it 2300. This support band should hold the market, you'd think, but there's a big, huge key reversal, and this pattern isn't finished. Because if we close at these levels, and if we close actually below 2450, which is entirely likely by Friday, then we will have a weekly key reversal down, which is yet further pressure on the downside. Now, I draw your attention to the bearish Andrews pitchfork. You can see those 3 times pointing down to the right-hand side from mid-top left down to bottom right-hand side. And you'd really got to look and say that the lower time is just below the long moving average. So it wouldn't surprise if we see a movement down a sucker trap just below the long moving average, and then it starts holding rather than actually accelerating even further. To counteract this, you'd need a close over the 50% Fibonacci level at 26.31, which is the recent move from April to June, and it seems unlikely at the moment. It does look as if we may have some further pressure on the downside there. Now, I'd like to move on to the next chart, and that's going to be LME Aluminium. Now, this has been really, really interesting. All the metals have been interesting in recent times for various reasons, but this one is because it started to actually make a big move down. It's broken down through the September 2016 to July 18 uptrend, that line that you can see there, which is broken, but it's got echoes. It's still being used. 2021 was the recent low. It's punched through that today. There's really nothing till 1977, and that's where we're seeing the low back in April. This move, which started back in early June, has continued all this while through. And you'd really need to reverse over 20, the 50% Fibonacci for the recent move from June, which is 21.81, to just negate this move down. All the moving averages are pointing low. The long moving average is actually slightly lower at 21.73, so even if you went above the long moving average, you still wouldn't break the 50% move down. So the only thing I point out to you is today is a key reversal day, and I've marked that there. It's a possible key reversal day. Higher high, lower low, lower low, and below or above two previous closes. And that's not a big ask, because yesterday was basically a doji cross or indecisive spinning top. And the one prior to that wasn't very far away either. So it's a big close tonight that could see the beginning of a further move down in this one, at least to 1977 and quite possibly even further. Now, I'd like to finish with an index, and that's the CME S&P futures. Using, on this one, typically the front month continuous on this. And it echoes again what I've said before. We've seen a rising market, and the market has risen to, started to halt a little bit in the middle of basically nowhere. But then if you take into account that we had an Andrews pitchfork from 2016 to 2018, which is those three lines you can see from the left-hand side going up across the top. It's broken, it's destroyed, but there are echoes, there are imprints in this market from that. And what we're seeing at the moment, and we've seen since April, and this would be now the fourth attempt to do this, is that we're going to rally possibly up to about, say, 28.36. It's a possibility. And then come off again, because that is where the lower tine is at this particular point in time. The most recent thing is that there's been a bearish engulfing pattern that was immediately followed by a key reversal up. So we had a bearish pattern, quite a good one, followed by an even better bullish pattern, and then we had a very slight move up, but it was sort of indecisive. And this indecision is being caused because of the proximity of that 28.36 lower time of the broken, busted, destroyed Andrews pitchfork that stretches from 2016 to 2018, and that's capping the move up on the market. So what's on the downside? Well, you've got a whole load of support, which is between a medium moving average at 27.14 down to some Fibonacci's at 27.01, and they're acting as a band of support underneath the market. They've not been pretty good or pretty bad, but in recent times, I'd say since May, they've been actually quite active and good. They've had two attempts down. We had one close below, but then nothing after that, and we moved back higher. So that would be the downside support. That 28.36 is key on the upside, and it's worthwhile watching out for that to see if we do manage to get anywhere closer to it. If we get, say, anywhere closer to, say, 28.30, 28.33, that could be enough. It doesn't need to be 36. It's an art, not a science, and then it'll come down. Anyway, I'd like to thank you for listening, and good trading.